Hey friends, Kristin LaVanway here with a real quick Phoenix real estate market update for you, or what I like to call This Week in Real Estate. Let's start off by taking a look at the numbers, shall we? So right now we have 5,157 active listings in our multiple listing service. Wait a second, what? Did I read that right? If we take out all the houses that are in like Prescott and Yuma and Tucson, we have 4,571 active listings in the greater Phoenix area. If we look at single family homes, 3,197 of those actively listed right now. If you're looking for just the basic, at least 3-bedroom, 2-bath, 2-car garage home, 2,389 of those actively listed in our multiple listing service. And if you want to spend less than $500,000, you got 913 homes to choose from. Hold on, I'll be right back. Yeah, I understand that it's 9 o'clock in the morning, but that's crazy. That's nuts. I mean, this is gonna be some kind of year. Yes, there's only 913 single family homes listed, but there's over 4,000 under contract, like 4 times as many under contract as there are available for sale. Wowzer. Mortgage rates went down just a teeny tiny bit, 2.73% on the old Freddie Mac scale, down from 2.77 last week. Let's look at our top 5 cities. Avondale, right up there at top. There's only 20 houses for sale right now in Avondale, a city of 85,000 people. Chandler in the second spot with 150 homes for sale. Gilbert, whopping 94 homes for sale. In Gilbert, you know, there's 260,000 people that live in Gilbert. Glendale's in the number 4 spot with 140 homes for sale. And Maricopa's still in that 5th place spot with 88 homes for sale. That's probably your best bet right there. In terms of like house per capita that you might possibly be able to buy. Yeah, inventory continues to be a real issue right now. Cromford Market Index, our little index that lets us know, where prices are heading, 484.8, another record. It just keeps going up. Demand is softening. I can't even say it's softening. It's just a little bit lower, a tiny bit lower. If I had to guess, I'd say buyers are going to continue to become very frustrated, and they might just check out for a bit, and our demand will continue to go down, which might help things, might help supply go up. At some point, it'll balance out. I don't know when that's going to be. But it's hard when your typical response to an offer is something like this. Thank you for the offer. We had 25 offers in total, almost all of them over the asking price. 5 of them were cash. And the offer that we ended up taking was a cash buyer with no appraisal, no inspection, and a short close. It is really hard for normal, like mortal buyers to deal with that, to compete with that, But don't be discouraged. Don't think you have to drink your way out of this year. It will get better. I promise you. I don't know when, but it will get better. And if you are trying to buy, realize that you're going to have to put in a very, very strong offer. Taking a look at the number of closings that were over the asking price, the $300,000 to $500,000 price range, yeah, it's like 40% of those are over the asking price. $7,500, $9,000, right in there. It's very competitive. If you're under $300,000 right now, if that's your price range, it is a free-for-all. It is insane and is very, very difficult for anybody who's, doesn't have some extra cash to throw at this thing. And if you're thinking, well, I'll just go look in Santan Valley. There's got to be something, affordable down there. Yeah, forget about it. There are 9 listings right now at $300,000 or less, and 91 under contract. Like that door is closing rapidly. So appreciation right now is holding at 19.2%, which I know is crazy, but I remind you that the record was set in August of 2005 when we were at 45%. And it's possible that the appreciation will go up, but there are 2 factors that I think might keep things from getting like really nuts. Number 1, if you look back at 2005, remember that frenzy was caused by speculation. There were actually tons of houses. We actually had twice as many houses as we needed. But people were buying houses like they were baseball trading cards. They were just buying and selling, And so it was really driving prices up for an unnatural way. Most of those houses were vacant. They were just turning them around in 6 months to try and make a quick buck. Right now, of course, it's because there's not enough houses to go around. And so again, demand's probably going to start to diminish as people are going to say, well, I'm just going to kind of wait it out a little bit. Number two, as affordability starts to become an issue, that's also going to maybe put the brakes on things. Because again, people aren't buying a speculation, they're buying because it's within their budget, a home that they can live in. Our housing opportunity index for third quarter of 2020 was 61 roughly. We don't have the numbers yet for the fourth quarter, but my guess is that's going to go down. And when it's below 60, that starts to be a bit of a pinch. We'll see what happens. Hopefully there's something that kind of levels things out. I know right now day drinking might be like the best strategy you can think of, but I would suggest that patience might be a better strategy in the long run. So if there's anything I can do to help you, if you have any questions or comments, if you just want to have a quick cocktail and cry on my shoulder, well, you know where to find me, Kristin here at Phoenix.com. That's where. Go out there and make it a marvelous Monday.